Hello, my name is Ryan Clark, and the following presentation will be on the successes and failures of our team's company, Bigfoot Shoes, for the business strategy game. The other members of our team are Daisy, Jackie, and Marie. The strategic vision for our company started very differently than it ended. Our initial intent was to act as the low-price, high-volume leader within the industry, but soon found out this was not the best strategy. Very early on, the market indicated that higher quality products were a far more desirable option and the price was only a secondary factor. As a result, we shifted our focus with the intent of maximizing the quality of our products. We accomplished this feat by heavily incentivizing our employees and maximizing our TQM contributions. These efforts combined led to a higher cost, but with a higher credit rating and image rating to go along with our steady increase in other key market metrics. The previously stated vision put in place early on in the simulation did not lead to any massive gains in the market outside of a few key areas that will be discussed later. However, we did finish the simulation with an SQ rating of 9 stars and an image rating above investor expectations. Total revenue is the total amount of money earned during a specific period of time. Bigfoot Shoes saw a steady increase in revenue throughout the simulation, peaking in year 15, then declining in years 16 and 17. This chart shows the varying levels of revenues the company earned from each segment. The vast majority of those earnings came from the wholesale segment. However, towards the end of the simulation, you can see revenues from internet sales increasing steadily. Earnings per share, or EPS, is the net income of a firm divided by the total amount of outstanding shares held by stockholders. Our company repurchased shares throughout the simulation in order to inflate our EPS. However, in years 16 and 17, as a result of inflated costs and reduced sales, our EPS dropped drastically. The credit rating that a firm holds within the simulation determines the interest rate they must pay for any outstanding debt. As a result of this factor, the company quickly determined that we needed to pay off our debt as quickly as possible while incurring only necessary new debt. Because of our actions, we maintained a credit rating of A or higher for the entire simulation after taking control of our firm. The stock price that a firm holds can be used to calculate capital gains or losses for investment and tax purposes. We were able to maintain a stock price at or above investor expectations in all but 2 years of the simulation. A higher return on equity means an organization is earning more after-tax profit per dollar of equity capital provided by partners or shareholders. One of our firm's biggest challenges towards the end of the simulation was determining the best way to maintain our ROE. Image rating is based on the branded style and quality in each geographic region, market shares for private and branded labeled footwear in all regions, and corporate citizenship. Through employee compensation, corporate ethics programs, and constantly improving our products, we're able to continually maintain an at or above investor expectation image rating. Unit sales are the total amount of products our company sold in a given year. Our biggest limiting factor throughout the simulation was our ability to produce more products. Our lack of capacity prevented that growth until year 15 when our new facilities began operating. This chart shows the sales from each segment on a yearly basis. The goal of every organization is to maximize their market share within an industry. It acts as an indicator for investors and shareholders alike regarding the health of an organization, as well as opportunities that may be available. While our company's market share growth in the wholesale and private sectors remained fairly stagnant, we did see steady growth in the internet segment throughout the simulation. Throughout the simulation, the previous metrics were used as guideposts for our team as to the direction and health of our business. We were able to analyze competitor movements and see how our business was affected by them. Additionally, we were very quickly learned that while we may have had what sounded like a great business model to start, the market and our competitors are what eventually drive the decisions needing to be made. Having the consumer needs and desires at the forefront of every business plan is a necessity. Thank you for taking the time to listen to this presentation. I hope that, like us, you were able to learn more about the intricacies of business and be able to take them with you into the real-world business environment.